Mm.
So this is not a small problem. And if you kind of sample it over a 30-year period, it'll affect billions. Um, and so it kind of just hit home how siloed the financial system is.
In this intriguing finance snippet, Lyn Alden shares her journey into gold and silver, dating back to when gold was priced at $3 an ounce. She discusses her realization of a broken monetary system in 2017, attributing it to a widening fiscal deficit in the U.S. Despite not being in a recession, this anomaly prompted her deep dive into understanding how sovereign debt bubbles end. Lyn Alden predicts an unusual macro decade, leading her to transition from equity to macro-focused investments. Her analysis includes Bitcoin, a resilient asset surviving multiple significant drawdowns and returning to new all-time highs, making it a compelling and unique investment in the evolving financial landscape. With that, let's dive into the video to hear her full thesis.
Once I was kind of old enough and conscious enough to understand what gold and silver are. And so actually I got into gold and silver at a young age, back when gold was like $300 an ounce. And so it's always kind of just been there for me. Um, I started to realize money was broken in some sense back in around 2017 or so, um, because we started to get a widening fiscal deficit in the US, even though we were not in a recession, which had not really happened since the Vietnam War. That was and it continued in 2018, 2019. And so I started looking more into how do sovereign debt bubbles end? Prior to that, I was like, well, eventually they print it or something, right? But it's like, okay, actually mechanically, what does this look like? And what time frame and what are the factors and what to look for? So I started to do a multi-year deep dive. And that's actually what kind of led me to transition away from mostly focusing on equity investing to more focusing on macro, money, energy, that kind of stuff, because I realized that we're entering a unusual macro environment that, it's like the type of decade that kind of changes a lot of things. The bigger the normal things happen that history books kind of focus on more than other decades. And so in other words, I was like, this is gonna be a more macro decade than the 90s were, for example. Um, and so that was kind of like the initial starting points. Um, and then, of course, kind of like studying Bitcoin over time, seeing how that works. I originally I always found it neat, but I was like, I mean, the chance that any sort of like new techno money is going to work is obviously very low. So the first time you see it, you're like, that's neat, but I mean, come on. And then it's like when it comes back a second time, you're like, wow, that thing's still here. And then you're like, how does this thing work? And then you kind of like over time, you just kind of run into it more and more time. And so you actually think, okay, this is actually pretty interesting. It's the only asset that ever survived more like three 75% plus drawdowns and then went back to new all-time highs. I'm not aware of any other asset that has done that. Some of the best stocks in the world have done it once. Like they'll have like one big 80 or 90% drawdown, and then they'll come back, usually associated with the dot-com bubble. Some of the best companies in the world have done that, but I don't know any asset that's done that three times. So that kind of wakes people up. And I think it's probably on track to do it a fourth time in the coming years.
In the next segment, Lyn Alden delves into the impact of currency devaluation on individuals, particularly in developing countries. She highlights the unique challenges faced by those managing assets in nations with rapidly depreciating currencies, emphasizing the struggle to preserve both savings and wages. Alden sheds light on the hidden consequences of inflation, not only eroding savings, but also diminishing the purchasing power of wages. Drawing on real-life examples from countries like Egypt, she underscores the profound implications for individuals, businesses, and landlords, painting a vivid picture of a relentless treadmill where everyone must run faster just to maintain their position. Alden extends her analysis to developed countries, revealing the subtler yet equally impactful erosion of wealth and purchasing power. Ultimately, she hints at an impending crisis, warning viewers of a potential global economic challenge that transcends borders and socioeconomic statuses.
If you're an American, you don't really have to think about money that often. If you're in another developed country, you still think about the dollar occasionally, usually because commodities and things like that are usually priced in dollars. And so most people have kind of two currencies in their head. But if you're in a developing country, you're kind of a financial officer in addition to whatever normal job you have. You're trying to manage things and thinking about things that Americans and Europeans don't have to deal with that often, which is the currency itself just rapidly losing value or at any moment risking a sharp devaluation. Um, and it's very hard for them to kind of save another asset. So if you're an Egyptian, your options for saving are challenging. So you're getting currency. The stock market is not like the S&P 500. It's not like this like, historically good performing thing. It's very volatile. It does generally go up over time, but it easily has lost decades. The overall kind of risk adjusted return of it is very messy. It's very hard to trust it. Um, uh, uh, Gold is an option for many of them. Actually, dollars are a huge option. A lot of them will buy physical dollars on the gray market. Like I know physicians, logistics managers, like upper middle class professional people will go to the gray market. It's almost like a marijuana transaction. That's like the vibe of it, and they'll get these dollars and they'll just basically stick them under their mattress. And in the 21st century, that's what they've surveilled the landscape and decided this is one of my best kind of 12-month saving technologies is buying these papers and holding them. Longer term, it's gold jewelry, and then a lot of it is actually real estate. So they'll buy liquid real estate, often leave it empty, which is there's some degree of malinvestment there because you're just kind of buying it because you don't know what else to buy. Um, and so basically it's like kind of just realizing that when a and Egypt's 100 million people or 105 million or it's a very large population center country. Same thing when you add up all if you look at there's currently about 30 countries that have double-digit inflation right now, and they have ballpark about 1 billion people in them.
Mm.
So this is not a small problem. And if you kind of sample it over a 30-year period, it'll affect billions. Um, and so it kind of just hit home how siloed the financial system is. That basically their ability to get dollars, hold dollars in a bank account and trust it, or even be given access to a dollar bank account, basically be able to choose their own money is kind of a limitation. The other key factor I realized was when people focus on currency destruction, they almost always focus on savings, right? You store money in cash or bonds, and then you're worried about that getting inflated away. Um, Another big problem is wages, as well as just overall pricing. So if you're a worker in Egypt, right? So money supply growth is about 20% per year on average. If you're not aggressively trying to get a 20% raise every year, you're being diluted. Like your share of the monetary network is diminishing and you're on the wrong side of the Cantillon effect, right? So your money's being basically siphoned away from you. Your ongoing purchasing power in global terms. So, for example, your dollar equivalent wages will be shrinking if you're not aggressively getting raises that keep pace with the Egyptian pound's devaluation, right? And that's true also for small businesses. So I know small business owners there, and I talked to them about how do they set prices and things like that. And it's just if they're not raising prices on average 20% a year, right? If let's say they're not a fast growing company, they're just a family owned, pretty static, middle class, upper middle class business, making ends meet. They're selling products. If they're not raising prices by 20% a year, um, while their costs are also facing issues, they're also getting diluted, especially in global purchasing power terms. Um, and the same thing is true for if you're a landlord and you're not raising rent aggressively on your tenants, you're getting diluted. And that's hard because a lot of landlords actually know their tenants, especially there. I mean, a lot of times their tenant is a family member.
Mhm.
And so basically what a rapid currency dilution environment does is it puts every single person in that country on a treadmill to run as fast as they can to keep up with it, not just in terms of where to put their savings, but also how to continually increase their wages so that they're not just being completely left behind in global purchasing power terms, actual kind of international wealth accumulation, like richer on a global scale, the ability to travel outside of your country if you want to, for example, the ability to buy high quality imports like computers or cars or things like that. And so that the importance of that wage component when it comes to inflation hit home harder if I had not kind of directly experienced that environment and talked to so many people that I'm close friends and family with. Um, and of course, the same thing is actually true in developed countries. It's just more subtle. So in the United States, money supply grows at about 7% a year on average. And, let's say money supply per capita, right? So if money supply is growing at 7% on average, money supply per capita is probably growing at 6% on average. If you're not keeping up with that, you're becoming a smaller share of the network. And there are other people that are, say, closer to the source of money creation, bankers, large corporations that can issue tons of long duration cheap debt. They're basically shorting the currency that you're earning your wages in. And they're getting outsized. They're outperforming that, say, 6% hurdle, while the average worker is struggling to keep up.
In today's insightful discussion with Lyn Alden, we've explored the fascinating intersection of finance, macroeconomics, and the evolving role of traditional assets like gold and silver. From Lyn's early exposure to precious metals to her deep dive into macroeconomic trends, including the unprecedented resilience of Bitcoin, we've gained valuable perspectives on navigating a changing financial landscape. Lyn's observations on the challenges faced by individuals in developing countries, where currency devaluation impacts not only savings but also wages, shed light on a global economic dynamic that transcends borders. Whether you're a viewer in the US, Europe, or elsewhere, the implications of monetary policies on wealth preservation and accumulation are crucial considerations. As we wrap up today's content, we encourage you to reflect on the insights shared by Lyn Alden. If you found this discussion valuable, don't forget to subscribe, like the video, and share your thoughts in the comments below.